Hi, Jared. Welcome to
Lori,
Trader Chat.
great to see you again. How are you?
I know, I can't believe it's been 7 months. I was just
Oh,
telling Jared, I'm going to share with the viewers. I'm going to try not to fangirl too hard today because I really love Jared's book, The Mental Game of Trading, and it's helped my trading tremendously. I probably need to buy a couple more books and give them away to different members. But thank you for being here today. I appreciate it.
yeah, thanks, Lori. And I'm thrilled that you like it so much, and yeah, are being able to kind of share it with everybody else here too.
Absolutely. So, my first question for you today, as a technical mentor, the first thing I do when I work with newer traders or traders that are struggling is I say, journal your trades. You can't improve until we see technically what you're doing. And let's craft a playbook around what your edge is. And it's always surprising to me how few people journal because that's where you got to start. You got to watch your film. So, as a psychology mentor, what is the first thing that you get students to do?
It's same general idea. I call it data collection, but it's either a real time kind of dissection of like what you're going through while you're trading, right? What thoughts are popping up, especially around the common mistakes that you have, right? The entries that you know haven't quite hit all your criteria and you kind of get in there prematurely, or you're wanting to get out, you can't kind of tolerate the dancing around that price action can have, and either scratching for break even, or pulling a trade prematurely, or even letting it go because you're getting a little bit greedy or a bit of FOMO or overconfidence. It's important to kind of write down the thoughts, the emotions, the change in your perception of the market or your positions, either in real time or after the fact. And maybe to kind of reiterate or expand on the reason why journaling your trades are so important, and why what I'm suggesting is so important, is because most of the traders out there, right? You have to be your own coach at the same time that you are also the trader, right? You're the risk manager and the analyst, and you got to have all these kind of hats. Like, you're not on, a trading desk with, many people around you who are supporting you. You've got traders and coaches like yourself to help out, but in the heat of the moment, you got to play all those roles for yourself. And so journaling provides that kind of third person perspective on yourself, so you can begin to kind of iterate and take accountability and responsibility. And I would say that if you are not journaling your trades in the way you suggested, or you're not taking my suggestion and kind of doing that data collection, you're not taking full responsibility over your own trading success. You are basically gambling with that. You're gambling with your potential and kind of hoping to get lucky and make a lot of money quickly and then quit and right off into the sunset. That's what you're basically doing when you're not taking it as seriously as I know you suggest.
And I heard an analogy. It's kind of like going to I'm going to use a golf analogy because you're the big golfer. You go out to practice swinging, you hit 100 balls and you don't intentionally work on one specific thing. It's kind of the equivalent to that. You're just whacking at balls. You don't have a purpose. Like, I'm not even going to try to use a golf analogy with you or specific things.
No, but that is it. I mean, there's intentionality is correct. There's not like any accountability, right? Because that's the great thing about the driving range. Like, there's no rules. It's not golf, right? In the driving range is kind of like the sim. And if you're trading without a journal, you're kind of in that sort of holding zone between like becoming a real trader versus somebody who places trades wanting to make money. And that is not wrong. If that's what your goal is, then great, go do that. And we wish you luck. But if you want to become a trader, somebody who has real skill, then you have to have that intentionality. You have to have that dedication to a craft, to a process, to a routine, to developing real skill and knowledge. And then that gets deployed in your edge over time. And then those are two very different things, in my opinion.
You could probably tell when you start working with traders, those that are willing to put in the work and those that don't, who will get the most out of a mentorship with you and who's going to actually succeed. It's the people that put in the work. I heard a trader say he asked someone, "What's your edge?" And they responded with one sentence, and he knew that they were not putting in the work. You should be responding with 2 pages of specificity. It's all about those intentional and being very specific. So what is the common denominator that you see that runs through psychology issues with trading? Just about all traders face. What's the number one issue?
Probably not what you think, but I think the number one issue that I see is that there's a lack of understanding of what the real problems are. So you've got FOMO, you've got some risk aversion, you've got the hatred of losing, you've got revenge trading, you've got some desperation, right, where you're blowing up prop accounts and you just keep making the same big mistakes over and over again. There's overconfidence, but none of those are actually the problem, right? Those are sort of the symptoms, and I talk about this in detail in the book, right? That the emotionality, the extreme emotional volatility that you experience is like a pain signal. And it's your job to kind of figure out what that pain signal is telling you. And in many cases, it's underlying flaws, biases, wishes, right? The wish to make easy money, the expectation to make money every day, the expectation to control your emotions, the wish to make easy money, high expectations, the hatred of losing, hatred of variance. I mean, all of these are actually the problem. It's your perspective. It's that flawed view, that flawed or that biased view that comes internally that you can't control yet, right? And so what you're doing is you're bringing it into the market, and
Right.
you're imprinting a perception of market activity through that lens. And
Right.
then when the market doesn't give you what you want, well, then you experience fear and overconfidence and greed and anger and FOMO and all those things. That's what happens. What we want is to kind of clean that crap up, pardon my language, and be able to be more absorptive of what's going on in the market and then responsive and reactive to it, not the other way around. But it's complicated to be able to kind of tease that stuff out. And that's, I see you bringing up the chart, right? That's what the book is really all about. It kind of walks you through the steps to be able to do that for yourself.
And I just definitely wanted to bring up this PDF. This is free on Jared's website. You can just go log in, give your email, and you'll get this PDF. Mental hand history. We talked about inchworm the last time we talked, because that was the thing that really hit me between the eyes more than anything. And I know different concepts resonate with different people, but could you just give a brief explanation as to what the mental hand history is? Because again, I had never heard of it before your book.
Yeah, I mean, it's my own term. I mean, it comes from poker, because in poker, a poker coach is going to get a hand history, right? A record of kind of like a trade journal, right? Of a particular poker hand that's played. They'll send it to their coach and say, "Hey, what do you think? How do you think I did in this hand?" And so I wanted to kind of create the same kind of ethic from a mental standpoint, where we're looking at the dissection of a mental game problem. And this is something that my clients would send to me to review. To simplify the concept, the mental hand history is your tool to dig down into the roots of the issues that you're experiencing. So many of you see, again, the problems on the surface, and kind of like a weed, right? If you just pull the weed out and don't get the roots, the sucker is going to keep growing back again and again and again. That's what happens, right? You try to control your anger and your FOMO, et cetera, and it doesn't work because you're not getting at the roots. So the mental hand history is really a problem-solving tool that gets you to dissect and understand the causality. What is causing my FOMO? What is causing that revenge trading? If you're able to do that, then you can start to create a correction, right? And that's what, there's kind of 5 steps in the mental hand history. The 3rd step is defining that flaw. The 4th step is defining the correction. A lot of people, see FOMO on the surface. They say, oh, well, just be patient, right? There's going to be trades that you're just not going to be able to get into, and that's just reality. That's trading.
Right.
Well, that's like a surface level problem. When we dig down and figure out, well, FOMO might be caused by the hatred of losing, and missing out on an opportunity can feel like a loss. Even though you didn't lose any money, you lost opportunity. Or FOMO might kind of hit you from a competitive standpoint, like seeing other people make money, especially in a position that you could have been in had you not been off the desk, or just been paying more attention, or not been emotionally compromised, or not having lost 3 trades in a row, and so you're a little kind of butthurt and kind of a little sting to take that next one. But that's like the underlying flaw. And so that's what we're trying to correct, not the well, you should just kind of maintain patience and sit on your hands when you're supposed to, and only, like, all that stuff is correct and logical, but for you, it's not the root cause for that FOMO. So the mental hand history is how we figure out for you what is that root flaw.
Absolutely. I love that. And that was a lot of work. The worksheets are no joke. It's a lot of work, but if you want to get better and not be a gambler and be a real trader, I don't know how you can not do the work to get to the next level.
Well, I think of it like a personal trainer. If you read a book on personal training or physical fitness and think that that's going to give you muscles, right? I mean, I don't know anybody that would think that, truthfully, but mentally, it's kind of easy to, because the ideas make sense and you can kind of see how it's true for yourself and you're aware of the problem and you can kind of see it. But all of that knowledge is not enough to transform the emotional reactions that are occurring in real time. You need to develop real skill and real strength and real poise and real presence and a deeper understanding. And that's kind of like, building muscles. You got to get in there and do the work. Otherwise, they're just kind of empty promises.
Absolutely. And a new thing that we've been talking about in Chart Guys that we're trying to focus on, a lot of us is adding to winners. And it is the most painful and hardest thing to do. Adding to losers, sure, no problem, easy peasy. Adding to winners is hard. Do you have any advice around that psychologically doesn't impede you from taking that next step, letting winners run, and possibly even adding to winners when you see a trade go in the direction that your edge said it would, and it does, then add to it? It's painful.
Well, I kudos to you for getting them to do that, because I find it's just incredibly hard for a lot of traders just to hold a single position to their target, let alone being able to add to it and scale in. So I think a lot of the times it's a confidence thing. And when you have a confidence that is much more P&L driven versus execution and process driven, then you're going to be generally more reactive to the times where you scale into a position and then it ends up retracing and you end up losing, kind of bigger than you would have before. And so that kind of pain of the loss is going to hit your confidence. It might cause more anger. It might cause more, kind of emotional extremes, and then, kind of bad behavior that comes therein after. So if you're going to be able to kind of scale up properly, you got to have the confidence to be able to take that hit and know that it's not about you. It's just the variance and the variability, and your strategy and the system is still viable. Number two, you got to know that you're, in enough emotional control to not overreact to a bigger loss and have that cause, some real damage to your account, because that is a fairly common thing for a lot of traders.
And you just used an important word, process. It is difficult as a human to say, I had a great day. I followed my process. I lost money, but I followed my process, and not resulting, that Annie Duke comment, resulting. It's very difficult. And to just keep yourself in emotional control, tick, 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 tick. I did everything technically correct. The trade didn't go my way, and I still had a great day, and just keep that confidence from deteriorating. It's very difficult. Do you have any tips and tricks for people to not judge themselves on the dollar amount versus the process followed?
So yes, because I think like one trick is to do kind of the days since last manufacturing explosion, like kind of like a manufacturing plant. Like, yes, we want to keep track not of your P&L day to day, but I actually have clients with a sticky note that will put up on either their monitor or a wall or somewhere. It says like 1, day 2, day 3, day 4, and they go back to 0 when they mess up. And so they are actively tracking the execution of their strategy and not the P&L on a shorter term basis, like days and weeks.
I love that.
You can absolutely look at P&L, over a month, and that gets closer, right? But days and weeks, it's just really a lot of false feedback. So that's like kind of the easy one. The more complicated one is still not overly complicated, it just takes a little more work, which is to do what I call an A to C game analysis. We kind of referenced this with regards to Inchworm last time, where you're actually writing down what your A game looks like. What does you trading at your best look like? What does your B game look like? What does your C game look like? And when you do that, you can see it there in that kind of bonus section. When you do that, it gives you a kind of an objective view of how you're performing that day. So sometimes, there is a little bit of discretion that's made in certain trades. So you're not taking, kind of perfectly carved out setups, almost like an algo would every day. Right. There's some nuance to it. And so if you can define some of the qualitative factors that would indicate that you are trading at a high level, so you're describing what it's like when you're in a true A game, B game, or C game, then gives you another way of kind of identifying when your game is at its best. And again, you get credit for that, even if you lost money. And frankly, if you were performing poorly relative to what you've defined as your C game and you made money, then you should feel way worse about that. and, be really kind of diligent and ready to go to work and figure out why and
Right.
how to fix it. Because, just because you made money today does not mean that you've done a good job.
Absolutely. I'm taking notes. I'm not writing questions for you. I'm actually taking the days since the last process failure, or whatever the terminology that I'll end up using. That just resonated with me a lot. So I really like that.
Awesome.
So I understand you have a new program of coaching. You want to tell the viewers what that's about? Let me get to your website.
Yeah. So basically it's called the Mental Game of Trading Live, and so the name kind of infers what this is. This is bringing to life the book. And I know for a lot of traders, A, it's a lot of work to do it on your own. And B, to get kind of real feedback from me, or on how to like dissect and diagnose the issues that you're dealing with and how to fix them, and kind of walk you kind of through a process to be able to do that, is a bit complicated. So it's helpful to kind of have me on your team, so to speak.
Right.
And so, here's this opportunity to get basically some coaching, get some accountability, get a community who can help to kind of support you on this side of things. This is not a Discord group, and it's probably closer to what you have, which is, a group of really good people who are all very motivated to improve. And so if you want to be kind of part of that, and then also getting, feedback from me, there's 2 tiers of membership. There's an essential tier, where the feedback from me is a little bit more minimal through a weekly mailbag. You get access to these weekly strategy sessions. Strategy sessions are accessible from premium members. Like, they can submit their worksheets and questions, and I'll be kind of answering them during that 1 hour kind of strategy session. But the cool thing is, I'm kind of most excited about, there's a knowledge base, and it's growing, where there's lots of examples of me, walking traders through the process of creating a profile and a map and an A to C game analysis and a mental hand history, and all the tools that I, kind of introduce in the book, and actually, frankly, some more, is presented there. And then there's, questions that people have, and there's sort of easily accessible in a kind of an on-demand way. So, really, I guess it says it all there. It really is kind of the benefits of coaching, but just at a fraction of the cost.
That sounds wonderful. And thank you so much for launching it here and telling people about it. I appreciate it, chatting with me again. And I'm going to ask you, while we're on the show, on the chat, will you come back in 3 to 4 months? I love talking to you.
Of course. Yeah. I love the questions as well, Lori. It's great to talk to you too.
Wonderful. All right. And I don't think we can wrap this up without saying suck less. I mean, we can't.
Well, I hope everyone does suck less today.
That's the goal. Well, thank you so much for being here, and we will chat later.